What if one of the largest capital shifts in modern history was already in motion, and the world, caught up in the noise of daily headlines and political theater, barely noticed? Beneath the surface of news cycles that spin stories for clicks rather than clarity, something profound is taking shape. It isn't dramatic in appearance. There are no fiery speeches or breaking news alerts. It's quiet, strategic, deliberate. A financial rebellion is underway, one that could reshape the global economic order. And yet, most in the West continue to look away. While Washington clings to the narrative of eternal economic dominance, certain nations have stopped believing in it. They've grown tired of the arrogance, the double standards, the illusion of fairness. And now they're acting. Countries across Asia and the global South, led by the growing BRICS alliance, are moving away from one of America's greatest financial levers: U.S. Treasury bonds. What was once considered the world's safest investment is now being treated as a risk. And the consequences of this shift may be nothing short of historic. The numbers speak louder than any press release. Over $7.5 trillion in American assets could be on the move. Already in early 2024, China sold off $150 billion in U.S. Treasuries. That trend hasn't slowed. In fact, it's picking up speed. But this isn't just about China. This is a coordinated, collective pivot by countries who see the writing on the wall and refuse to be caught flat-footed. For them, this isn't about ideology, it's about survival, about sovereignty, about breaking free from a system that has too often served as a cage rather than a safety net. This movement didn't come out of nowhere. It's a long-brewing reaction to decades of coercion disguised as cooperation. Through institutions like the IMF and World Bank, the United States held power not just through markets, but through policy, offering loans with conditions so rigid, so intrusive, they effectively dictated the domestic agendas of entire nations. Privatize your utilities. Cut your subsidies. Open your borders to our corporations. The deals were made, the hands were shaken, and the consequences were suffered. By the people, never the lenders. What was sold as development was in many cases dependence. Now the world has had enough. The flight from the dollar is no longer theoretical. It's active, and it's accelerating. Investors across the globe, not just in emerging markets but in financial hubs, are quietly reducing their exposure to dollar-denominated assets. Treasury auctions are drawing fewer buyers. Confidence is eroding. And confidence is the only thing that has ever really held this system together. So why is this exodus happening now, and why with such force? The answers are brutal and obvious. First, there's the staggering U.S. debt, now poised to cross $37 trillion. The cost to service that debt is exploding, passing $1 trillion a year, a number so large it undermines belief in America's long-term solvency. Investors, governments, and financial institutions are asking a simple question: how long can this go on? Second, the global political landscape is deteriorating. The U.S. is no longer perceived as a neutral broker or stabilizing force. It has become, in the eyes of many, a co-belligerent in multiple wars. From Ukraine to Gaza, the U.S. is not only choosing sides, it's supplying the weapons. In an era of open conflict, many nations no longer feel comfortable anchoring their economies to a country so entangled in global hostilities. They don't want their economic futures tied to a superpower that uses financial systems as weapons and alliances as shields. And then there's the third, and perhaps most important factor: belief. The foundational belief that the US dollar is a stable, unquestioned reserve currency is no longer universal. The cracks have grown too wide to ignore. What was once considered too big to fail is now simply too risky to rely on. In this environment, the BRICS nations are not just withdrawing, they are building. An alternative financial architecture is already being assembled. Local currency trade agreements, new clearinghouses, even a potential BRICS-backed currency. These aren't speculative dreams. They are real, operational, and expanding. And the more they grow, the more viable the exit becomes for countries who once believed they had no other choice. For decades, the global trade system followed a familiar loop. Asian nations exported goods to the U.S., earned dollars, and recycled those dollars into U.S. treasuries. That cycle created a kind of artificial balance, allowing the U.S. to run massive deficits while the rest of the world absorbed the cost. It was a clever system, until it stopped working for everyone else. Now that cycle is breaking, and the implications are enormous. If countries stop recycling their surpluses into U.S. debt, America's borrowing costs will rise. If the dollar loses its status as the default global currency, it will lose the privileges that come with that status. The ability to print money without consequence, to sanction at will, to operate above the rules that others must follow. What happens when the dollar is no longer the gravitational center of the financial universe? What happens when the rest of the world decides it no longer wants to fund the American empire? We may be about to find out. This is not a moment of crisis. It's a turning point. A long-awaited shift in power, moving slowly, steadily, but unmistakably. The West can ignore it. The media can bury it. The institutions can pretend it isn't happening. But the numbers don't lie. The actions don't lie. And the silence is over. The shift has begun. And the world is watching. The model is breaking down. Not slowly, not quietly. Cracks are forming everywhere, and they're getting louder by the day. This isn't just a routine correction or a cyclical market event. No, this is something much deeper. We're witnessing the unraveling of the very foundation that has underpinned the global economy for nearly 8 decades. For most of the modern era, the United States dollar stood as the undisputed pillar of global finance. It wasn't just a currency, it was the symbol of trust, of security, of dominance. The anchor of trade. The bedrock of reserve holdings across the world. But now the illusion is fading. The world is beginning to see what was never supposed to be visible. That the king has no clothes. And it's not just whispers anymore. It's action. Real, measurable, systemic action. The BRICS nations, Brazil, Russia, India, China, South Africa, and a growing chorus of other emerging powers are laying the groundwork for a massive shift. They're not merely trimming exposure to U.S. Treasuries. They're preparing to unwind as much as $7.5 trillion in dollar-denominated assets. Trillions. That's not a forecast. That's not a warning. That's movement. It has begun. The question isn't whether this will happen. It's how fast it accelerates and how violently it shakes the global order when it does. So what comes next? If this capital pulls out of the United States, if that level of money leaves the safety of U.S. shores, then the U.S. could lose something it has held since the end of World War II, its status as the world's safe haven for capital. And when that confidence evaporates, the consequences will not be confined to the trading desks of New York or the halls of Washington. It will be felt everywhere. Rising interest rates, a rapidly weakening dollar, a government suddenly struggling to fund its own debt. Because without foreign capital propping up the system, America has to finance its own obligations. And that's a problem when your debt is already spiraling out of control. This is not some abstract policy discussion. This is the oxygen of the American economy being slowly choked off. Government programs could be slashed. Social Security, Medicare, infrastructure spending, all of it suddenly on unstable footing. And consumer borrowing? Think mortgages, credit cards, student loans. Everything gets more expensive, more restrictive, more dangerous. This is how the system begins to seize. The mechanisms we take for granted stop functioning smoothly. And behind it all, a single truth pulses louder and louder. Confidence is everything. And once it's gone, there's no going back. But this isn't just about financial loss or economic headwinds. It's about the erosion of power. For decades, the U.S. has wielded incredible influence, not just because of its military or political clout, but because of the dollar. Because the world needed the dollar. Now that need is fading. The BRICS bloc isn't just divesting. They're planning. They're building. They're openly discussing the creation of a new reserve currency, something to replace the dollar. And it might be digital. It might be decentralized. It might even be backed by commodities, possibly gold. A currency rooted not in debt, but in tangible value. Now let's be realistic. No one is launching a global commodity-backed currency tomorrow. There are immense technical hurdles. There are political battles. There are risks, huge ones. But the conversation is happening. The work is underway. And that should send a chill through every financial institution that still clings to the illusion of dollar invincibility. Because once a new system has critical mass, once enough countries sign on, the center of gravity begins to shift. And it never shifts back. As one investment officer recently said in an interview with Bloomberg, "We are witnessing a change in the world order, and we're not going back." That isn't hyperbole. That's reality. This isn't a temporary deviation or a market cycle. It's a transformation. And it's happening now. Slowly at first, then suddenly. And right now we are still early in the process. But the momentum is unmistakable. Many still argue that the dollar is too big to fail. But financial history is littered with the ruins of systems once thought invincible. It's not about whether the dollar starts to lose trust. It already has. The only question now is how much more it can afford to lose before the dam breaks completely. Confidence is like glass. Once it's cracked, every bump makes it worse. And if it shatters, if that $7.5 trillion starts moving out faster, if the exodus turns into a stampede, the fall will be rapid, and it will be brutal. So let's be clear, the dollar hasn't lost its crown. Not yet, but the crown is slipping. The signs are everywhere, and the world is watching. The global economy is not just evolving, it is mutating. And if we don't recognize the shift, if we don't adapt to it, we will be crushed by it. Which leads us to the only question that really matters now. Are we watching the beginning of the end of the dollar itself? Is the United States still in a position to turn this around, or has the shift already passed the point of no return? Let me know what you think. This is a conversation we need to have now, not when it's too late. Leave a comment, share your thoughts, challenge this perspective. Whatever you do, don't ignore what's happening. And if you found this valuable, if it gave you something to think about, please like, share, and subscribe. It makes a real difference. It helps keep this work going. And in a world this uncertain, staying informed might be the most important thing we can do. The storm is building, the world is changing, and the clock is ticking.